Hey everyone, thanks so much for joining me on the podcast here today. Great to chat with you.
Thanks for having me, Jared, on your podcast.
Let's dive right in. So let's assume that there's some people listening. This is their first introduction to you, right? So give them the quick kind of background on yourself, and then we'll talk a little bit about Sapphire. And then I know we have a couple topics you and I want to touch upon today. I'm really excited about. So let's start with you.
Yeah. So, I started out in my career as a developer a long time ago at Oracle. So I still have an affinity for people who build code, who write codes. Although nowadays, with the new generation of tools, I think everybody will become a software developer. I ended up starting a company, sold it off during the dot-com bubble, and then have been investing for over 2 decades now, mostly in enterprise software. We founded, my colleague Nino and I almost call him a work partner. We founded Sapphire Ventures about 14 years ago, spun it out of SAP, and have gone on to raise multiple funds. We are on our 6th fund, which is managing about over 10 billion right now. And our focus has always been on enterprise software, and we tend to invest in the fun part of enterprise software, which is when people have found product market fit and the companies are still growing 50-60%. So which means is typically it's between a Series B and mostly maybe Series D or a E. We sometimes do pre-IPO investments, although nowadays, like you have with Databricks, they are actually doing almost like an IPO round, or it is an IPO round that is just being done in private and not with public, in the public. The main difference, I guess, with the Databricks round is that there's no retail investors involved, right? Because in a typical IPO, they did the same thing. They have lots of crossover funds, public funds coming in. And they set a price, and created a book. So there was no difference. The only thing is that now public, retail shareholders can't really buy their shares. But sorry to digress.
No, that was perfect. It's, and it's interesting. It's probably, this is not like something that's totally new, right? But it's probably a path we'll see a lot more companies take, especially where, when things are going well as a public company, you're, valuations flying high, retail investors are all excited, but there are some negatives as well, right, to being a publicly traded company. So I think when you see some of these companies like Databricks go this route, it could end up being more normal to see that path, right?
Yes.
You agree?
Yes. I think, most entrepreneurs want to stay private as long as they can, because, there is a cost to doing business as a public company. First and foremost, I think is, of course, there is, anywhere between 5 to 10 million of costs just with, what you have to do to be a public company by filing, having audits, having all of the internal kind of, record keeping and everything done properly. So there is cost in being a public company. And I think the thing that people don't talk about is that the worst thing about being a public company is that the fact is the stock is so easily tradable. And, that causes, your stock price might go down significantly, not because something happened to the business, but because some research analyst wrote some kind of a report on it, or maybe some other company in your space had a bad quarter and all of a sudden, your stock trades down. And the problem with that is it causes a lot of morale issues within the company, right? With the employees. And I think that is one of the things that is very hard to navigate, especially when everybody can check the stock price, on Yahoo or, whatever app, Robinhood or whatever app they're using, right? So I think if possible, a lot of people don't want to go public, but on the other hand, being a publicly traded company, you do have some advantages, right? You are able to raise debt much more easily, like convertible note, and even your longest shareholders, like your investors who might have been in there and might not have, they still have something called IRR, where they have to basically return capital to their LPs. And there's a cost, there's a time value of money, which is measured by IRR. And, that clock is ticking. So even your investors who are very supportive at some point have to get liquidity and exit out of the company and return shares to their LPs. So that's what's going to drive these IPOs. And I think Databricks will be a public company, sometime in the near future.
But now, because of this latest round of funding, it gives them much more flexibility, right, into when that ends up happening.
That's right.
But that was some big news.
Yes. And it also gives them a lot of flexibility. Like, look, as the CEO said, they had like oversubscription of almost 2x, right? They raised 10 billion, but he said that when he looked at the book, there was like almost 19 billion of demand. So if they really wanted, they could probably still stay private, for another 24, 18 months. But at some point, there is some advantages to being a public company where, having a publicly traded shares can give you some advantages in what kind of acquisitions you do, what kind of financial engineering you do that is not available always to private companies.
Selfishly, I miss when companies were going public so often because I got to read those S1s and learn just so much about the business. And, there's obviously ways like I get a lot of information from having interviews with CEOs here, right? And what they're willing to tell. But also what I've noticed is the ones that are, anytime I've interviewed a publicly traded company, they have to watch what they say a lot more. Because like you were saying, now, especially with all these like AI research tools, they say something that could be deemed as negative, even if it isn't. It gets flagged, it goes on stock twits, and all of a sudden people are selling the stock. So it's interesting.
Yeah. And look, and it also opens up for you for class action lawsuits, right? It's not only the SEC or the DOJ coming after you, but there is nuisance lawsuits that people file against, whatever you say. Even if your stock drops by 10% for nothing you did, you will always face these lawsuits, class action lawsuits, and those, you have to deal with it and have to settle them.
Yeah, and that goes back to your point of how much money you end up spending as a publicly traded company just to follow the rules and regulations, right?
Exactly.
Interesting. So I feel like we'd have to go pretty far to find someone that has not heard of Sapphire before, honestly. But let's assume there's some people here that this is their first introduction to Sapphire. I also love reaching those people, by the way, because it's like someone new, right, that gets to know you and the company. So let's talk about, you gave us kind of a basic breakdown of the company. Yes. Let's talk about maybe some of your top investments that you've made over the life of these several funds. And then, how you're thinking about AI investments moving forward.
Yeah. So look, we are enterprise software through and through, although we have made some, fintech investments that have done quite well. So, we are investors in company like Monday.com, which is a tool that a lot of people uses, and it's one of probably the most premier PLG company where, they don't have salespeople. They all sell through online, and has done extremely well. We have invested in companies like JFrog, which is, again, a much more of a developer tool software company. And then, we have done companies like Square, which is now called Block. And we were actually in a pre-IPO round, that happened. And then recently, just like everybody else, we have been focusing a lot more on AI enabled apps. We have invested in companies like, Elise AI. And that is like an app that is set up for property managers, right? And basically being a co-pilot for property managers and helping them with how they deal with their rentals and schedule their meetings and accept payments. And the third area that I'm really excited, and we talk about it, is around defense. I think if you look at the defense industry, first and foremost, the DoD in the US alone spends about $1 trillion a year, right? And it hasn't moved to the cloud, hasn't moved to using AI in a big way. And I think there are a lot of opportunities, and we have actually made a couple of investments in that area also. One called Defense Unicorns, and another one called Ask Sage, which is basically an AI enabled kind of chat and chat GPT for the military.
Super interesting. And don't worry, I'm not going to ask you who your favorite favorite company you've invested in. That's like asking your favorite child, right? I will
Exactly.
not ask that.
Yeah, 100%. Sometimes I say that, okay, the latest investment is my favorite investment, but that is still picking somebody, which is not always correct.
I won't set you up for that. I've asked that in the past, and people usually give me an answer, but I see the look on their face like, oh, sorry, everyone else that I've invested in, right? So I won't ask you that.
Yeah. And the other thing with that is that, we don't know which company is going to be the most successful company till the exit happens, right? I have like so many companies in my, Five9 is a good example, which actually we did their pre-IPO round. It went out, had a terrible time being a public company because they basically blew their first quarter, right? And the stock traded down and we fixed it, right? So, and then it became a really good success story. So that is a problem with, at a point of time, if you asked an investor, which is your favorite company, that might not be the one that actually ends up providing the most returns or, providing the kind of the being the best company in that portfolio.
It's, what you said kind of reminds me of what Tom Brady used to, I'm from, Boston area originally. So I was a big Patriots fan, and they used to always ask him which was his favorite Super Bowl ring, and he'd always say the next one.
That's right.
Right. So like yours is, who's your favorite company? It's the next company we invest in because that's what's next.
Exactly.
Super interesting. When I look at kind of, you and I were talking about this earlier about the IPO landscape. We're going to get to this as far as how it relates to AI in a second, but what really interests me is it seems like a couple of years ago, we weren't having these companies that were $1 trillion companies. So like your potential to get a substantial multiple now at the stage at which you're investing, I'd imagine it's gone up in recent years, right?
Yes.
Than what it was in the past. And why do you think that is?
Well, look, first and foremost, the size of what these companies can provide, the TAM of the market has just gone up tremendously, right? Because, when I started investing, it would be like public companies were $1 billion market cap. Public companies didn't go out. If you go back and look in history, there are very few companies that actually went IPO at 8, 9, 10 billion. Even 15 years ago, there were only like a handful of public companies that were 5 billion or so. It wasn't that long ago, maybe like 15 years ago, that Salesforce traded at like 2 billion, right? So, and why has that happened? And I think the opportunity size has just grown and grown and grown. Like, before, Square is a great example. Before Square came along, people could do a lot of things, like SMBs could do a lot of things without software. But now you have Toast, you have Square, you have, Restaurant 365, and people's productivity has been changed by this software. And, that's why the TAM for these software companies has grown so much. And that's why you have these market caps, right? And going on to what you're talking about AI, that is why, everybody in the investment community is so excited, because I think AI increases the TAM by, even 10, 60, 10, 100x from what it has been. And I think some of these companies are going to be not only $1 trillion, we're going to have a $10 trillion company at some point. And I don't even know what 1,000 trillion is called, by the way.
We'll find out.
Because I know billion and then a trillion, but I don't know. And I'll tell you, in our lifetime, we are going to get 1,000 trillion market cap company, and it's coming.
It's incredible. Yeah. It's it was funny. I view how like when Uber in the early days was raising and they kind of. Nothing like against them, right? Because this happens all the time. It was the same thing with Google, right?
Yeah.
A lot of times they underestimated what the market would become when they even pitched investors. And someone said this to me. I had the CEO of Digits on, the AI accounting company.
Yeah.
And he said one of his investors came to him and said like, "Oh, this is kind of like Uber." Yeah. He's like, "How is AI accounting like?"
Yeah.
He goes, "No. you're in an industry where if you even just make it slightly better than what's out there, it's a massive market.
That's right.
And I think now more than ever, investors are starting to, like, even what you're doing, right? It's even looking above and beyond what is the current TAM in terms of what could it become based on this technology. And that's why the AI is just flourishing.
Very good example. There's a lot of companies in legal tech, right? And the reason why people are going after legal tech is not because the TAM for software that legal companies or lawyers or law firms buy is very big. They're actually not very big. But what they're really going after is the fact that people are going to pay a lot more because they're going to make people, lawyers and paralegals, a lot more efficient. Right. So the TAM of that is not really, okay, what is the software you can sell, the IT budget? The TAM now is, hey, how much do you pay somebody's salary and what is your whole kind of, and how can I, do the work of 10 people with 2 people, right? So the TAM for AI apps and, AI enabled kind of workflows has increased so much. And look, I don't think one of the things that people talk about is that, as these AI apps take hold, will people lose their jobs? And I always have this belief, because there's an economic paradox called Jevons paradox, where every time you actually decrease the price of a resource, the usage of that resource actually goes up tenfold, right? So people are always, and it happened with radiologists, right? Maybe 10 years ago, radiology became a lot more image driven, and a lot of algorithms were able to kind of do the work of the radiologists. And, radiologists were all like, okay, our job is going to go away. But what happened was because one CT scan or something, the cost of that went down so much, is now we go get MRIs and CT scans a lot more, right? So I think that's what's going to happen, with all of these AI enabled apps, which is it's going to actually make life better for a lot of people. And, all the drudge work, grunt work that people used to do will be replaced by people, where they actually have to think and do things that they like. And that is the TAM that these AI apps are going after.
Super interesting.
Yeah.
I want to make sure we you talked a little bit about this earlier, but I want to go back to it. And this is a question I think everyone is asking right now. When we've seen a ton of funding, of these AI startups, when will we see a high profile AI exit or exits?
Well, I do think that some people are gearing up. I think the one that, I think the first company that will go out will probably be around AI infrastructure. And, what we hear from the bankers, CoreWeave is probably the first kind of AI infrastructure company going to go out. Now you can debate whether, hey, is it really an AI company or a data center company? That aside, it is enabling a lot of AI training, AI inference works. So, it is a legitimate AI company. And after that, I think it is going to be a bunch of, company like, look, Databricks, I think has so much tailwind because of AI, right? They were actually an AI company. People forget that they started out as being a Spark company, which is kind of the basis for all of the machine learning tools. And they pivoted and built a data warehouse product. But they are still large part of the revenue still comes from machine learning and AI. So I think they will be another AI company that goes out. Potentially Scale AI, Scale.ai has the kind of the revenues and the ARRs for them to be a very successful IPO also. So those are some of the things I think will go. I think initially next year it'll be the really large kind of AI companies with 500 million, 600 million or above in revenues that are going to go out. And I think over time, the IPO market will open up and will enable smaller IPOs, maybe where companies are 200, maybe 150, 200 million in ARR will go out, but that will happen in 2026. But I'll bet you that any company that goes out will try to spin AI as part of their product, as how they go to market, and put the AI pixie dust on themselves.
Yeah, like we see so many now with AI in the company name.
That's
Not
right.
in the description, in the full on, yeah. And some make sense. Some of it, like, it could be like a dog walking company
That's
and it
right.
has AI in the, we'll see.
See, remember, we had the whole thing with cloud initially. There were companies named with, we had a company called Cloud Health, and there were companies named with data, right? There was Datadog, we had Data IQ, there's Data
True.
Robot. So it's the same thing, right? I think people kind of try to leverage the name and, talk about it. And I think ultimately what happens is that doesn't matter what you do, but as a public company, if you have to do well, you have to meet and beat your numbers, right? You meet your projections and then kind of increase the projections the next quarter. And if you can do that,
you're 100%. And I'm not trying to say I'm knocking it either. Like, it's just, it is always funny that, like you're saying, there's, during when everything was cloud this and cloud that, and now AI, and we even saw it a lot with even the blockchain companies, right? Everyone had blockchain in their name too.
Exactly.
So, yeah. Last question or maybe one or two quick more questions, and then we'll wrap things up. But you and I were talking about this earlier, and I wish we were recording it because I loved your response. So let's try to recreate this if we can. But we were talking about the key differences in investing in AI versus non-AI, and basically in the future, it's everyone should be leveraging like AI in some way. So it really won't be AI versus non-AI, but I'll let you answer that.
No, exactly. Like, look, when a first time a hype comes in, right? People all say, as I was saying, people set up these funds that was like a Java fund or a mobile fund or a SaaS fund, right? And over time, people realize that's just the way how you build a company. So, I think by the end of next year, there won't be any AI companies. It'll just be companies that is leveraging AI to build products, right? And even companies that are not AI right now will all have something that they use AI to make their products much better. So I think people will forget about saying it's an AI native company or a, AI based fund. It's just going to be, hey, it's a great company with great entrepreneurs and providing a product or a service that people value and are willing to pay for it.
I love it. Yeah. I want to thank you so much for joining me here today. I really enjoyed this conversation. I feel like we could talk about so much more. So maybe we'll have to have you come back on and dig a little bit deeper, but I really appreciate you being on here today, and super excited to continue following along with Sapphire.
Yeah. Thanks, Jared. Thanks for having me. I really enjoyed our conversation.